And amid that volatility, many investors are wondering where to turn. Even Jim Cramer has turned his back on the Mag 7, saying the name no longer fits. Let's get more on the shift from growth to value and back to maybe traditional dividend investing. Matt Powers is a managing partner at Powers Advisory Group. Matt, pitch us on dividends and, where people can kind of go to feel safest, but also not give up any upside if the market rights itself.
Yeah, Kelly, thanks for having me. I think we can say this is a pretty timely topic following last week and definitely yesterday. I mean, today's telling a bit of a different story, but I've talked about it quite a bit on the network. There's a clear change of theme with a shift from growth to value, dividend investing in other areas that have been largely out of favor for a couple of years. I mean, it was a quiet push and understated, but certainly obvious now. I mean, realistically, this doesn't or shouldn't come as a surprise. We could say there's some quote unquote new opportunities that didn't exist just a few months ago. Until recently, it was challenging to find areas to invest in for a host of reasons, which some are now catalysts for why we're seeing this. You've got tariffs and this back and forth news out of Washington and Trump's ever-changing stance on policies. We just see that objectively investors they're just tired. They're exhausted. So It's welcoming in that value, shifting us away from the high growth areas of the market. There's a quick push to normalization in the equities markets, and diversification hasn't necessarily been popular the last 12 years, and we see this is changing back to a traditional investing mindset.
Yeah, I'm diversified. I've got NVIDIA and Apple and, Tesla. I don't know what else you want. Matt, let me take the example where for clients, you often use Schwab funds like the U.S. Large Cap Dividend Fund. And the year-to-date returns there, it's up 5%, while the Large Cap Growth Fund there is down 6%. So that's an 11-point outperformance. And you're confident that if people, jump in now, that trend will prevail for the rest of the year?
Yeah, so those are both ETFs that are largely held. We own them for our clients, and what's interesting here, if you take a deeper look, and you just talked about the returns, but the tech sector's weightings in SCHG, the large cap growth, is the equivalent of the combined weight of healthcare, financials, and staples on the dividend side. So they each make up about half of their respective portfolios at 48%. I mean, it shows that concentration risk on the growth side, especially as market rotation takes center stage this year. So if you dig just a little bit deeper and you look at the top holdings, so on the growth ETF, you've got the Mag 7. And on the dividend side, it's those boring flagship blue chip name. It's the AbbVie, Coke, Pepsi, Pfizer. A year ago, the growth side holdings were investors' favorites, but there is a clear leadership shift here, and you can see that by the returns.
Yeah.
So bottom line, you have to pay attention to broadening diversification in these portfolios and just don't ignore value.
Right. So in the high growth, large cap growth fund, they're 48% weighted in technology. In the high dividend fund, it's 18% financials. That's the biggest holding. You're not concerned there about a slowdown?
No, I mean, that goes back to that diversification within that portfolio. So when you've got a growth fund or growth ETF right now, you're looking at, a lot of them are half of the portfolios are in those growth stocks, and we're seeing that slowdown. You start to look in the value area or dividend area, and it's well diversified. You've got a handful of sectors, and we like staples, we like healthcare. They're leading year to date. There's a handful of reasons, but primarily because of their defensive characteristics.
Well, as people, many people take that phone call this year. I'm sure last year and the last couple of years, it was a little more out of favor. Matt, thanks for now. Yeah. It's good to see you. Matt Powers, we appreciate it.
Thank you.